Hey everybody, this is Tony, the Geeky agent from Remax, just checking in with you. It's a pretty dreary, rainy, drizzly day here in Binbrook. So after a full morning of looking through emails and answering responses and following up on my open house from yesterday, I thought I'd take a minute and chat with y'all, see how you doing. This is maybe the first of many of these little broadcasts I'm hoping to do here on a Monday morning. What we're looking to do is just chat about what's happening here in Binbrook, anyways, in Hamilton. There's a lot of construction going on, a lot of new builds happening, a lot of resale homes. The prices recently have taken off kind of crazily. We're just getting ready here. Myself, we have a booth at Hamilton Comic Con this coming weekend, so we got a lot of that sort of stuff to get ready ahead of time. But I thought I'd have a look at is investing in Hamilton right now. There's a lot of opportunity. The prices are still pretty good here in Hamilton, and actually in neighboring Brantford is actually a really good place to go. So what I'm going to do is take an example of something that's actually available for purchase right now in Brantford, Ontario. It is a duplex that's on sale right now for $250,000. Now, I would suggest always looking at multi-unit properties if you're going to be investing, mainly because you don't want to get stuck without a tenant. If you've got a single unit with one tenant and they leave, basically for that month, 2 months, 3 months that you're looking for a good tenant to take their place, you're left holding the bag for all the costs, like mortgage, the utilities, all that sort of stuff. So getting a duplex or a triplex is probably the better way to go. That way, even if you lose one client, you've got another tenant in there who's still covering the majority of your costs on that unit. So we got a unit here. I can't tell you the address, unfortunately. It's not my listing. I'm not allowed to advertise listings publicly that aren't mine. But there is one in Brantford. If you need to know, you can send me a private message. I'd be happy to get you hooked up with this information. It's on sale for $250,000, like we mentioned. The standard down payment would be about 25%, which is about $63,000. I am going to round off the numbers here so that it's easier to work with. Which leaves you with a mortgage amount of $187,000, $188,000. If you're looking at picking up a mortgage on that for 2.5%, which is about the average, I just renewed my mortgage actually for a 4-year fixed rate of 2.29%, and you can get as low as 2.19 for 2 years. So we'll say 2.5% to be on the safe side. You're looking at a monthly mortgage of about $840. After that, you're looking at insurance, which on a yearly basis is about just under $1,300, and all this information is included with the MLS listing, so I'm just going by what the agent has told us here. Currently, there are 2 units in the building, like I mentioned. They're renting for about $780 each, plus utilities. So the tenants are paying for the basic utilities. Typically, as a landlord, you'd be paying for things like the water heater rental and your own building insurance. Which I mentioned comes to about just under $1,300 a year for this particular unit. So we're paying right now in Brantford $780 times 2 units times 12 months, which gives you an annual net income on the rent of $18,720. Now, as I mentioned, your insurance is about $1,300, and the mortgage total, $840 a month for 12 months, comes to just over $10,000. So your annual net is actually pretty low. Like your annual net is just over $7,000, $7,300, $7,400 for the year. So you're not really going to get rich doing that. Now, what we're looking at, though, is sort of a longer term. Like myself, I have a son who's 13 years old, who's in grade 8, and another one who's 11. So in about 5 years, you're looking at them going into college or university. So we're looking at long-term investment here, at least on a 5-year scale, so we can cash out, take that money and use it towards tuition or college fees, books, all that sort of stuff. So at the end of 5 years, you collected just under $37,000 in rent, $36,784 to be exact. At the same time, the property is appreciating in value. Appreciation rates have been all over the map in Hamilton, just depending on what part of the city that you're in. If you're looking at overall, I mean, I've seen reports that on a year-to-year basis, we've seen a 16% jump in the average house price. That's very specific to what area you're in, though. Some areas are really low, some areas are much higher than that. So what I've done here is look at a 3% appreciation. Historically, that's about average in the lower city here, 3 to 4%. We want to be conservative. If we make extra money at the end of this, great. If not, then at least we're covered here, that we're being fairly safe with the numbers. So on a 3% appreciation, if you started with a $250,000 home, at the end of 5 years, that house is going to be worth just under $290,000, giving you a $40,000 increase due to appreciation. So now let's look at the overall numbers. What's happening is The tenants are paying your mortgage is $840 a month. And that's roughly half and half going towards the interest that you owe. It's about 52% going towards the interest and 48% going towards the principal, that original $250,000 that you originally agreed to pay for the house. So at the end of 5 years, what's happened is you've paid interest of about $26,000, so that money's gone. But you've also accumulated $24,000 in principal, which the tenants have paid for you. So now what you're looking at is your $40,000 that you've increased in appreciation. You've made $36,000 in rent. You've appreciated the property by $24,000, and you've paid down the principal by $24,000. So once you add all that up, you're at about $88,000, if my numbers aren't crazy. And that's taking out your expenses, your annual expenses for your mortgage and your insurance. So at the end of it all, if you cash out and you sell this house, you're at about $88,000 roughly, $90,000, maybe close to $100,000. Looking at all these and depending on how you can kind of manage your expenses, if you're going to be increasing the rent slightly over that 5-year period, and depending if you have any major stuff. So you want to make sure you get into a duplex that's in good shape. You don't want to have to be replacing the roof in 2 years. You don't want to have to be replacing the furnace in like the first 2 to 3 years. So hopefully you get into something that's pretty decent, and I can help guide you through that. We do very thorough home inspections. We bring in HVAC technicians to really thoroughly look over the equipment in the home. We don't mess around because this is going to be a very serious investment for you, and we want to make sure that you're well situated here and that you're building wealth for your future and not wasting money on all of these little expenses that you got going on there. So at the end of 5 years, you've got roughly $90,000 that you've made in profit on an original investment of about $62,000, $63,000 down payment, which you get back when you cash out. So that money isn't lost. That went towards the principal. When you sell the house at the end, you get that money back. So you got about $90,000. You do have to pay taxes on it, depending on how you structure yourself, and we recommend that you get connected with a good tax accountant and tax lawyer that can really get you set up, whether you're starting a limited partnership, or whether you're at the point where you've already got a company set up or incorporated somehow. The taxes will be different. You can claim various expenses in different ways to help minimize your tax burden and keep as much of that money as possible. When you're at the end of it all, basically you have a choice. You can cash out and take that money, use that money towards your college university tuition. Right now it's about $6,000 a year is the average tuition here in Ontario. So for a 3-year degree, you're looking at about $18,000, $24,000 if you're in for a 4-year degree, plus books and other expenses. So you're probably, if you're staying in residence and all that sort of thing, in that $40,000 range, maybe, to be safe. You cashed out at about $90,000. That's enough to cover my 2 kids going into university or college. You can choose to do that. You can keep the property and put them in for longer term investments. You can transfer them over to your kids once they're done university, so they've got a little base income stream that they can manage of about $36,000 a year coming right out of university or college. Help them maintain any student debt that they may have. Just give them a nice baseline, teach them how to manage a property in the meantime, and give them that responsibility and give them a foundation to get into the real estate market and start securing their financial futures. This is the best short-term investment. I consider 5 years a short-term investment that you're going to get. I mean, you're not going to see that kind of a return on the stock market unless you're being very risky and you're sort of just going crazy, and then you're also incurring, like I said, a lot of risk. The stock market, if Donald Trump gets elected, is probably going to go downhill pretty quickly. At least that's the speculation from all the analysts and all that sort of thing. So you never really know. I mean, people talk back and forth. But real estate, if you look long term, the past 40 years in the Hamilton market, you do see that fluctuation, but overall you see an upward trend. It does appreciate over time. If you're sort of in a down period, you just have to wait it out for a year and wait till it starts to swing back up again. That's usually the way it goes. So that's just a basic example. That's an actual property that's available right now for purchase in Brantford, Ontario, which for me takes about 20 minutes to get there. If you're interested in this kind of thing, send me a private message. We'll put you on a list. I hope to do sort of a weekly best investment idea kind of thing, broadcast like this. We'll be chatting about actual properties that are available for purchase in Hamilton or Brantford or the surrounding areas, Ancaster, Dundas. Those properties in those areas tend to be a bit pricier, so your return is a little bit lower, even though you can charge more rent. There's higher taxes and stuff that goes with it. So it does make it a little bit more difficult. It's a bit more difficult to get into those markets because your down payment needs to be larger. There are strategies to get around that as well. You can get into a partnership with a group of friends where you all chip in towards the down payment. If you are thinking of buying one of these properties and using it as an investment properties, most of the lenders we work with right now, like RBC, CIBC, TD, the brokers, actually take the rental income into account. So basically, you could have some rental history there, like these properties that I'm looking at right now. They actually have been rentals for quite some time. So they do have annual expenses reports that we can look at for a number of years that we can provide to the banks, and use the income that's coming in there in addition to your own income to help you qualify for the purchase of these properties. Or if you're buying a property that's never been used as a rental property before, we can have an appraiser come out. There is a fee associated with that. I think it's somewhere between $250, $350 in the Hamilton area, but they can give you an idea of what the market rent would be for that property, and then we take that information to the bank, and again, they use that as in conjunction with your own income to see if you can qualify for the purchase of that property. We're always looking for ways to enhance your financial portfolio. I mean, obviously you have your own home to live in, and you might look at a situation where you have a live-rent situation, so you have a duplex where you're living and renting out the second unit, which is useful, or purely as an income property where you're renting out both units. In any of those events, we'd like to help as much as possible. If you're interested in this kind of information, give me a shout. Send me a private message here on Facebook. Email me at tony@thegeekyagent.com. Give me a shout, 289-237-9896. Text or phone me. Either way, I'm good. We can get you on this list. Basically, an automatic email, come out once a week with investment opportunities in the Hamilton area. If this is the kind of thing that you're interested in, give me a shout. I'm always available. We can chat, go for a coffee, do some FaceTime, do some Skype, whatever it is that works for you. Especially if you're from out of town, we work with a lot of guys from the Toronto GTA area. If you want to Skype with me and go over some information here about what's available in Hamilton, I'm more than happy to help you out. And I gotta go. I gotta get ready. I got my Star Wars shirt on. The first half of today was real estate. The second half of today is geek stuff. We got to get ready for Hamilton Comic Con. So I got to find all my props, my lightsabers and my Darth Vader mask and all that stuff. So everybody's got something to wear in the photo booth. And if you're in the Hamilton area this weekend, Canadian Warplane Museum, we'll be there. We have our own booth. We're right next to the Batmobile and the General Lee. And just down the row from all the wrestlers, Mick Foley's going to be there, Bret Hart, a bunch of guys, David Prowse, the man in the Darth Vader suit. He's going to be there. And Al Bundy's neighbor, Marcy Darcy, Amanda Beard, is going to be there as well as Norm. Norm from Cheers is going to be there. There's actually an event there called Beers with Norm. You can actually go into a private event and have craft beers with Norm Peterson from Cheers. Come on, how awesome is that? That's going to be an amazing weekend. Hope to see you there. And thanks for listening, guys. Until next time, have a great day.